Good day, dear investors. Thank you everyone for joining in to another bond issue webinar organized by Orion Securities. Today the webinar is made in a bit different way. You're currently watching a recording of the webinar and not a live stream, so to say. So the thing is that there won't be any Q&A section at the end of the webinar as usual, but everyone can ask the questions, send in their questions to email address dcm@orion.lt. So today we will have a presentation of Latvian issuer SIA KAITA LV LV. It is a holding company, part of a larger KAITA Group, a group that's quite known in the Baltic capital markets. So some of you may have already heard of them. And during the subscription period, the issuer is planning to raise 2.8 million euros with 10% interest rates paid to the investors on a quarterly basis. Today, the presentation will be held by me, Orion Securities representative Matas Čipkus, and representatives from the group. We have Vilnius, who is co-founder or board member of KAITA Group, and Jonas Izokaitis, head of investor relations at the group. Hello. Hello. Yeah. So yeah, before starting with the further webinar, I want to just remind everyone that if you have any questions, please send the questions to email address dcm@orion.lt, and we will try to answer the questions as quick as possible. So firstly, quick overview of the terms of the bond. So as mentioned, the issue size of the bond is 2.8 million euros with annual coupon rate of 10%. The subscription period starts on 13th of July and ends on 29th of July, with planned issue date on 31st of July, with coupon payments on quarterly basis. The bond's term will be 2 years, so the redemption will be in year 2028, and the use of proceeds from the bond will be used to refinance the SPV existing shareholder loan and finance share buybacks into its SPV. The SPV mentioned is another Latvian company, SIA V38. It currently owns and operates co-living facility in Riga called Youston, Riga. So the proceeds will be used to buy back shares of the SPV into the issuer, and the issuer will own 100% of the shares after the bond issue. So the sources of redemption of the project will be sale of apartments and other premises of the property, or alternatively refinancing option. The collateral for the investors of the bond will be first rank pledge of 100% of shares of the SPV, then first rank pledge of dedicated account, which we'll talk about a little bit further later on, and first rank pledge of SPV's assets after the redemption of senior creditor. A short issuer at a glance. The company's representatives will expand on the company. I would like to just give a short summary. So the issuer KAITA LV Living is a Latvian holding company. It currently owns 10% of the SPV V38, and as mentioned before, the company will buy the shares of the company after the issue of the bonds, so they will own 100%. They will 100% that will be pledged to the investors. So the SPV owns 100% of a Youston Riga co-living project in Riga. It is a fully furnished 174 apartment residential building with reconstruction completed in September of last year. It currently holds a high occupancy rate of 95%, and its latest valuation was more than 12.5 million euros. So terms and conditions of the issue. So the issuer is Latvian company KAITA LV Living SIA. As usual, the bond, this is a public offering of the bond, so any investor from Latvia, Lithuania, or Estonia can invest into this issue. The issue size of the bond is 2.8 million euros, and subscription period will run until 29th of July. The issue date is planned on 31st of July with a 2-year term, so maturity is planned in year 2028. The coupon rate for this bond will be 10% with quarterly coupon payments. The bond itself will be listed on Nasdaq First North Vilnius market within first 6 months of the issue. And as I mentioned before, the collateral consists of 3 parts. The first part is pledge of shares of the SPV, then a pledge of dedicated account. So the dedicated account is basically an account that will be used to cover any shortfall in cash flow if the average sale price falls below the agreed minimum average price. The agreed average price could be found in the information document description. And the last part of the collateral will be a pledge of shares of the SPV, which will be pledged after the redemption of the senior creditor. As mentioned before, the use of funds will be to refinance the associated company's existing shareholder loans and to finance the shares of the SPV. So the issuer will hold 100% of the shares after the bond process. We'd like to mention also a couple of financial covenants of this issue. So the first would be adjusted equity ratio. With it, the issuer ensures that adjusted equity ratio of the issuer on consolidated basis with SPV at all times will be greater than 20%. Then limits on disposal of assets with this covenant, the issuer will ensure that as long as the bonds are not redeemed in full, the SPV shall not sell or otherwise dispose any of its assets unless it's used for the repayment of the obligations under permitted disposal. And with the permitted disposal, you can find the correct description also in the information document. Well, and lastly, the issuer will have the early redemption option after the first 12 months from the issue date. If the issuer decides to use the early redemption option 12 months after the issue date, but not later than 6 months before the maturity date, they will have to pay a 2% premium of the nominal value of the bonds. But if they decide to redeem the bonds 6 months before the maturity date, they will have to pay 100% of the nominal value, so without any premium. So once again, use of proceeds, as I mentioned before, 1,240,000 euros will be used to refinance the shareholders' debt, and the remaining 1,560,000 euros will be used to buy the shares of the SPV into the issuer. So once again, a key dates of the issue. So the subscription period will run from July 13th to July 29th, with planned issue date on July 31st. After 1 year, the early redemption possibility opens up to the issuer. Well, and after 2 years, in year 2028, on July 31st, the bonds will be redeemed. And of course, the interest payments will be made on quarterly basis. Before giving floor to our other presenters, we would like to go through what we think are key investment highlights. Firstly, we think it's worth mentioning the whole group, KAITA Group. It is one of the largest real estate players in Lithuania. They have successfully completed 26 residential and commercial projects in Vilnius, and also they have the largest residential rental portfolios in Lithuania. So this quite vast spectrum of real estate services could give a lot of confidence into the whole exit strategy for the current project and the redemption of the bonds. Secondly, what we'd like to mention is the location of the project in Riga. It is located basically near the old town of Riga. So strong connectivity and surrounding amenities support tenant demand and long-term asset value. And of course, we'd like to mention the actual project of Youston, Riga. As we mentioned before, it is fully reconstructed and furnished with a high occupancy of 95%. And the latest valuation, which was made last month, actually, the valuation is larger than 12.5 million euros. So yeah, it's worth noting that with this project, there's really no real estate development risk associated, and yeah, only the exit strategy. So yeah, giving floor to our presenters.
Thank you, Matas. So shortly about KAITA Group structure. So KAITA Group has 4 subholdings, and one of them is KAITA Development, which is focused on build-to-sell model, and it's mainly in Vilnius. We are organizing schemes to build-to-sell models, original and common flats for selling. And another subholding is KAITA Living. It's the biggest portfolio of co-living and micro apartments for rent schemes in Vilnius. So we are focusing in co-working, co-living, and micro living properties, which is based to make rent from them. The third subholding is KAITA International. It is duplicate as KAITA Living in Vilnius, but it's for international projects. So for now, we have projects in Central Europe, Prague, in Riga, as we're speaking right now, and in the United Kingdom, London, which is right now on the development stage. So these 2 pillars, 2 subholdings, KAITA Living and KAITA Internationals, and their projects are operated by KAITA Operations. So the 4th our subholding, which is focused in operations and how to make the best NOI from all the properties, which is this KAITA Operations works on Youston brand, and last year was announced as the best operator in the Co-Living International Awards. So we are in all our fields trying to be the best as we can, and this our group structure shows our diverse and diversification of our worker scope. Firstly, from build to sell to build to rent models. Secondly, from geographic perspective. So we are working in Lithuania and in other countries too. And actually, we having not just the real estate business, but it is driven by the operations too, just to have the most value in all our properties on all our schemes. Just mention a few other things. What we are doing, as Matis told, we already implement a lot of projects and in Vilnius, and already ended construction in Prague and in Riga projects. So we are buying properties from different kind of properties, from greenfields to conversion projects. So actually, all our co-living projects are conversion projects. So we are seeing as potential to improve existing buildings and to make the second chance for them, second life to be implemented as micro living, and not just building, but we're focusing on the full cycle of our work. So we are under development, and we are selling apartments, and right now our main target is working for different kind of countries, mainly working with two products: one build to sell, secondly build to rent schemes. And completed project, as I mentioned, two of them in Vilnius, the Slucko Street, Vilnius. It was the first co-living project which started during COVID. So at that time, nobody thought that people will want to live in small apartments in common areas to share all the knowledge, foods, and everything. But we kept believing in this product and this model. So after the first co-living, we saw that it is a very good product for our clients, for the investors, for the banks and financial markets. So we started with the second one, Slucko Street. After that, we started international development. So in Prague, it was our first co-living. So Riga is the last one co-living, which is right now already finished. One of them we have in London, which is right now under development. But what is very important, just a little bit come back to the Riga, that all the know-how which is based on all our projects from first co-living to the last one right now, with all the know-how what we already get from development perspective, from the rental perspective, what the client, what is need for client, how the common spaces should look like, what the basic good strategy for the planning of the apartments is. All this know-how established in the last, we can say, our right now the best co-living in Riga, which is like a cherry on cake right now, and we keep moving further. So projects under development right now, few of them in Vilnius. Actually, right now we have one of the biggest portfolio which is under development compared to other developers in Lithuania. So one of them is Moods is already in the end of the development stage. Newton and Off is in the start of the middle of the development stage. And Youston, London, as I mentioned, is right now on the development stage 2, and we are willing that next year in spring the newcomers, the first our clients will be showing on London, and will be renting our first co-living in London. So what is worth to mention that all of these projects, except right now in London, they are already not just in the development or already in the development stage, but they are in the stage where we already started selling them, and to end the full cycle of the development process. So that's the basic of how we are ensuring and that all the group get the right income from all the different kind of projects, because they are not just under development, already finished development, but they are on the selling stage 2.
Thank you, Vilnius. I will take from that. What is the most important thing when considering real estate? So it is location, location, location. So we have a project which is located in centrally, which can be, you can access from our object Old Town in 2 to 5 minutes. There is excellent connectivity and public transportation. So all the objects that you naturally would like to visit, like Opera House, or you're a student and you would and you would like to attend Quality University of Latvia. So it is great location for tourists, and it's great locations if you consider real estate. Centrally located in Riga as an investment or personal use. So regarding the housing market, what is the most important thing that we spotted when considering selling small apartments, that it is very hard, or you cannot find small apartments centrally located, fully furnished and in renovated building to buy for 70,000 plus. As you can see from new projects which other developers introducing to the market, you can see that apartment usually starts from 25 square meters and above, and the prices starts from 100,000. So I think we are feeling this the spot, and as you can see from the housing market perspective, the confidence is growing. All in all, in Latvia, you can see that to sell an asset takes less time, and although there are quite little objects and apartments of 18 to 25 square meters, you can see the demand is growing and the increased transaction amount. Overall, we can say that it is affordability that matters the most, and which was impacted by the growth of salary of households and of course growing confidence in other developers, as we see that they trying to introduce to the market other projects like quite premium locations and quite premium prices, like from if you consider centrally located new build projects, premium locations, you can see that prices can vary from 3,800 to 5,500 and above. So we are trying to. I think it's a good time to implement our plan and to offer to the market affordable housing, and this is our plan.
As Jonas mentioned, I will add some details about the project too, but what's very important that we find out that as a balance between the location, the average area of the flats, which can be used for normal living, you can say, with all the bedrooms, all the bathrooms, kitchens, and the common areas, and compacted this in one thing. So in the price, which is, as Jonas mentioned, 70,000 plus for the apartment, is quite unique spot right now, and that's our main strategy, not in terms of Riga, but in terms of other countries too, because our know-how is mainly about micro living, about how to have in the smaller space have the same value or the same possibility to live, but to get it for the better price. So that's our selling point in Riga too. And as Matas mentioned before, we have 174 units. And what is very important to say that commonly the co-living building uses is accommodation, hotels or other ones, not the residential one. In terms of this project, it is residential use, and that was the next stage or next our challenge. What we challenge us to make not just the good property, but good building use or residential use is in this property, and we have, as I mentioned, common spaces, common areas, gym, lounges, kitchens, game room, sauna, which is very important for the residents, and right now we have a planned 2-year sales period. And at the same time, we keep running the operations. We keep running rental income, and during this time, we are planning to get around rental income more than 800,000 per the period. So the student period, you can say. So last year showing us almost 800,000. What is really important to say too is that we have other premises too. What we are right now finding how to use and how to sell too. Just not focusing in existing units, but how to make extra units too, and to make even more profitable business case as it right now. So in terms of type of apartments, we have 4 types of apartments, and as I mentioned, the micro living you can see from the minimal and the maximal area of the apartment. So from 11, you can imagine that everything fits in this 11 square meters, and to 27.2 square meters, as we can say, it's the larger one, and already looks. So from that point, the residential use, the units, and the extra units, what we are planning to do, and the right fit and the right scale apartments, which is can be sold for very good price compared to other in the markets.
I would like to add one thing before we'll continue. I would like to add that you see the final product, you see that the studio types and everything, and not only we like to see and we enjoy the finished product, but we this project was noticed by Chief architect of Riga and tourism agency, and it was nominated as a best renovation conversion project of 2025. So.
Yeah, good mention. Thank you, Jonas. And just few pictures how these apartment studios from 11 square meters to 27 square meters per room looks like. So you can see that everything is full furnished and fully furnished apartments. They are brandly new, you can say. The conversion and all the renovation and furnishing ended just in September of 2025. So the new buyers of the exact every studio, they don't have any extra any extra thing to do for this studio and apartments. So couple of things about funding structure, and just to add, right now we have 4 partners in this project. One of the most important, there is the senior credit, senior financer, big bank, which finance all the development stage. And after the development stage, this year, the second quarter, they refinance and even increased the loan. So part of the loan were moved to existing investors, financing investors. So the other partner right now at the moment is the investors, which believed 2 years ago about the Riga project, about our micro living model and schemes, and this financial investors, they agreed to be in this project for 2 years, and right now we are planning with this bonds to repayment of the granted loans and payment of the shares to take all the shares of our investors. So right now we have 2 partners which believed in this project and believing right now and showing the belief of this project, and that's the senior creditor and the investors. And the third party is the biggest real estate company, Latvia, and they are as managers of sales right now for apartments. So we already agreed. They started the sales of these apartments. Actually, what we are seeing from their point of view, that they are believing in this project too. Our prices are the same or even better level than the last our valuation. So that's on the same page as we see right now in the market, and the same 70,000+ price for one apartment. That's the big topic which keeps believing them too, that that's a good selling point and that's the good project too. So, and the last partner, so we are right now at this project. Then we started more than 2 years ago with the acquisition of this project, and right now we already fully implemented this project from the development perspective, from the planning perspective, and that's the most important thing, that already all the risks from the development perspective, which is mostly the biggest risk in development business, already handled. And right now we are inviting the bonds investors to become our partners too, and just to switch from the financial partners to the other partners. So just a few things to add. As I mentioned in before about the group structure, very important. What is the team structure? As you see right now, we have 4 partners and 4 founders of KAITA Group. We are working together more than 10 years in different kind of fields, and right now we all of us are hands-on in the business. So we see it as our strength from that point, that all the partners they are covering their part, and we are not somewhere else in other businesses or doing something different, but we are in real estate business, we are in micro living business, and we love to do it. And now one of them are talking with you. And what is more important, that we have established team too, which helped us to develop all these projects, what we just mentioned before. And we are happy that we have such a strong team, which has a strong know-how in development perspective. At the same time, focused on micro living, on co-living, and focused into the build to sell and build to rent residential living schemes. And the group structure, just a few words about this, where the SIA B38 is, you can see in the slide, and the KAITA Group is owned by, as I mentioned, 4 partners, 4 founders, and they are, as I mentioned, are hands-on on the business every day.
So let's continue with the financial statements. And first of all, we have issuer KAITA LV Living SIA. So it's a sub-holding company, and without any other operations. So the sole purpose of this holding is to hold shares of SPV, or sole investment, and the other operating income consists of only of interest accrued from the investment. So you can see that this company has received the loan and also used and issued the loan. So all these investments were made regarding investments in SPV B38. No other things worth to mention. So let's continue to the SPV, which holds the assets. As you can see, as of 2025, the SPV already received roughly 420,000 of income from rental activities. As you can see, also what is worth to mention, other operating income was 3.7 million, which consists of revaluation and completion of the object. So we went through all the stages, so acquisition, permitting, conversion, and operation. So that value reflects the final stage. And as you can see, also in 2026 first quarter, rental activities remain. Compared to 2025, there was a bit shorter term, because first quarter is 3 months, and we started activities roughly in the middle of August. So that's why the occupancy still was above 95%, and while we maintain high rental prices per units, which consist from 450 to 830 per unit, and which we were very happy, and we saw that the market nod to us and said that the product fit is right there. Let's continue. So what can we see? We have an audited balance sheet of SPV SIA D38. So as you can see from 2024, we can see land, buildings, and engineering structures moved to investment property, and which I already mentioned was finished and fully operational starting from roughly 2025 middle August, and it reflects the increased value of 12,200,000. So other loans and other long-term receivables. So we have had a budget and saved some of the budget. So to be economical, we just issued short term to put back the money back to the group. And you can see also cash and cash equivalents up to 500. That shows that that is purely a result of rental activities and cash deposits. So total owned capital is 3,800,000. It's around 28% equity ratio. And if you see the total long-term liabilities, it consists of payables to associated companies and loans from credit institutions. As you can see, the loan amount has decreased to a bit. So we have repaid, but afterwards, and after all, it doesn't show the increased loan amount, which is up to 8,025,000, and because it was received on April, and it doesn't include in the first quarter. And as you can see, other things. So payables to associated companies, naturally financial investors, which were attracted and were active, were acting as a with the purpose like just from a return perspective, and KAITA Group acted as a solo manager of the project, which offered the investment, went through all the stages, and finally we are here. So payables to associated companies have decreased alongside with senior loan increase, and that's about it. It's a project that is fully finished and generating income. So we, as Vilnius mentioned, as Matas mentioned, we expect to receive additional income from registering other premises. We see that the need of storage, especially when you have to offer small apartments, is very high, and so we will convert and offer to like as an additional package. And rental income, we will plan up to 1 million. So for its additional sources. So let's not forget about KAITA Group.
Okay. Yeah. Thank you, Vilnius. Thank you, Jonas. Yeah. So just before finishing up, we'd like to briefly go through the risk factors. As with every investment product, the investors must realize if the risks associated with the product they're buying are okay with them. So for the full descriptions of the risk factors, I invite every investor to read through those in the information document of this issue. With this slide, we would like to mention just a few risk factors that we think are very important, and as a result, if any of these materialize, the issuer could face difficulties in meeting its obligations or redeeming the bonds. So yeah, firstly the liquidity risks, as we have mentioned before, the issuer is a holding company that depends on funds from the SPV, proceeds from asset sales and additional finance. So as the SPV, the VIA38 has bank financing in place, so distribution of bonds to the issuer may be restricted or delayed. Then secondly, well, we think that real estate market and inflation risk are really important, as the primarily source of funds for the redemption of the bonds are expected to be proceeds from sale of the apartments. So yeah, so any slowdown in the Latvian real estate market, any lower residential property prices or lower sales could reduce the project's revenues and asset liquidity. Then, of course, the rental income risk. Yeah, so as mentioned before, the property is generating rental revenue. It's currently occupied at 95%. But like until the apartments are sold, the mentioned rental income represents the main source of project's operating cash flows. So as a significant share of tenants consist of international students or younger professionals. So yeah, any economic or geopolitical uncertainty as well as changes in immigration policy could reduce the demand or occupancy levels, and rental rates pretty much. And of course, we'd like to mention the risks associated with the bond liquidity. As we mentioned before, the bond will be listed on Nasdaq First North. However, the issuer gives no guarantees that an active secondary market will develop. So yeah, even if the bonds are admitted to trading on First North market, the investors may find it difficult to sell the bonds at the desired time or price. Just before finishing up with the presentation, I'd like to remind key terms and conditions. So yeah, the issuer is a Latvian holding company, KAITA LV Living. It's part of KAITA Group. The bond is a public offering in all Baltic states, so any investor could participate in the bond offering through their financial intermediaries. The issuer is planning to raise up to 2.8 million euros. The subscription period will run until 29th of July, with planned issue date on July 31st. The term of the bond is 2 years, and the coupon payments will be made on quarterly basis. Just to mention the collateral, firstly will be after the initial shares buybacks, the issuer will pledge the shares of the SPV SIA V38. Then, as we mentioned before, the dedicated account, which will guarantee pretty much if any sales made from the apartments would be below the average sales price. So the issue will have to cover the spread between the minimum average price and the actual average price. And lastly, the issuer will pledge the SPV shares after the senior creditor will be paid out in the term of in those 2 years. Yeah, in terms of the listing will be made within first 6 months of the issue. Source of redemption, as already mentioned, will be sale from the apartment and other premises of Youston Riga project and the use of funds. will be to refinance the SPV's existing shareholder loans and to buy the shares of the SPV into the issuer. So yeah, if anyone has any additional questions, you can please send those questions to the email address dcm@orion.lt. So yeah, thank you, Jonas. Thank you, Vilnius, for presenting the issue today. And yeah, and until next time, everyone enjoy their summer. Thank you.
Thank you.
very much.